Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for April 22nd, 2018. I hope you guys are having a great weekend. Before we get started, as always, I just want to mention if you haven't tried out ForexAnalytix, you got to do it. It's $1, 10 days. Just click this button right here. And once you do that, you can grab the mobile app from the Google Play Store or the iTunes Store and get everything that we offer via mobile. You can even jump in our chat rooms that are right here, and you can do it via mobile, and it'll launch a Safari or Mozilla or whatever search engine that you have on your phone. You can actually even participate in the chat room via the mobile. So make sure you do that when you get an opportunity. I do it today. It's only $1. It's only $1. Try it out. All right, now we're going to talk about last week. We're going to talk about this week coming up, obviously, but I guess the first thing I need to point out is the reversals that we saw, and let's talk about candlestick patterns. The reversals that we saw on the weekly charts for most of the currencies. Now, this is the euro, and I will take you over to the dollar index, to my own drawings, my own charts, because I didn't provide the analysis on the weekend charts, but obviously the guys and gals on our team, we follow very similar, especially when you're talking basic technical analysis, we follow very similar analysis, and that's why our charts are pretty much the same. So it doesn't really matter who's delivering you guys analysis. It's pretty consistent. That's, we pride ourselves on that as far as our basic technical analysis and candlestick analysis. But this just shows you the consolidation that we're seeing in the euro, for example. And by the way, the euro is going to have a big week this week. Now, we have some PMIs that are coming out, early Monday. But what's really important this week in regards to the euro is that we do have the ECB meeting on Thursday. And then what's even probably more important than the ECB, I don't know, it's going to be neck and neck, is Angela Merkel's visit to the U.S. at the very end of the week, which will be on Friday. And obviously the talk between, or the, how should I say, let's just put it this way, Merkel and Germany's Merkel and Donald Trump have not had the best relationship, and there's going to be some tough talk on Friday regarding trade. So I think there's going to be a lot that can influence the euro this week, and as you can see here on the charts, it's a very tight consolidation. Now, one of the things that I have to point out regarding the euro is the unprecedented long positions in the euro dollar this year. And if you look at what's happened this year, is we've just consolidated. Now, if you imagine these extended long euro positions and you're not getting paid for it, the risk is now lower. And if you see the way the dollar has acted across the board against most other currencies, like here's the cable, for example. Look at the weekly candle. That's a big shooting star, bearish engulfing, gnarly looking reversal candle, false breakout, by the way, in case you didn't catch it. Big reversal candle there, and you're seeing them, across the board. I mean, let's take a look at the Aussie, for example. Here's the Aussie weekly, big, nasty black candle, or we call it black. It's actually red, but it doesn't really matter. It's a bearish candle. Okay, it doesn't matter what color you call it. We call them black here because back in the day, before color printers, everybody used to call them white or a black candle. So we reference them as black or bearish or red. You might see them on the charts. But here's the kiwi again. This is a big dark cloud cover. Nasty looking, and you can see this down channel. I mean, we're heading towards the lower end of this channel probably. Really ugly. Let's take a look at the Canadian. Here's the Canadian. That's a piercing line. bullish reversal, especially after a 618 retracement that you, let's see if you can see it here on the daily chart. See the 618. Yeah, so big reversal candle on the Canadian. Last one I should show you, just the dollar pairs. Let's just take a look at the U.S. dollar Japanese yen, and the U.S. dollar Japanese yen. It's kind of beating to its own drumming to its own beat. Is it beating to its own drum? You get my drift. But we're coming up into some resistance, but still, the dollar has been grinding higher pretty much against everything. And I guess I should just show you the dollar index here. This is the dollar index itself, and here's your weekly candle, which is a pretty bullish hammer candle. You know, in a downtrend, when you have these hammer candles, you have to, the risk is higher. But the problem with the dollar index right now, as you can see how the dollar index is pushing this year-long trend line that's been in existence since the beginning of the year. Really, we peaked right at Donald Trump's inauguration. I think that the high of the dollar was right around then, and this downtrend line has really kept us captivated. But you know, if the dollar index breaks above 91, we're going to squeeze, and you're going to probably see that long euro liquidation. So we have to be very, very careful that this consolidation period that we've seen in the dollar index may come to an end. You know, volatility in equities have been very high this year. Currency volatility has been quite low, but that should change. Will this be the week? I'm kind of thinking it is. And you guys know, for the last couple of weeks, and if you know you've been watching these week ahead videos, we've been really looking for a dollar turn higher in the last few weeks, and this week might be it. There's a lot of risk associated or surrounding this week. You know, there's a few other events that are happening this week. I guess I should mention them while we're here. Is that Monday night we have CPI out of Australia. We also have on Thursday night, Friday morning, we have the BOJ rate decision, which we're not expecting the BOJ to really change their stance. And inflation has been, you know, the underlying factor for Japan for so long, and most analysts don't feel that inflation has risen to the point where the BOJ is going to become much more hawkish at this point. So we're not expecting anything really out of the BOJ. The end of the week, we have GDP numbers out of the US and the UK. So that might move the needle a little bit as well. But I think it's really going to be the ECB and the trade talks between the US and Germany at the end of the week. And you guys know that we're really walking a fine line. Dollar bears or euro bulls is another way to look at it, since the euro is factored. It's more than 50% of the weighting of the dollar index. If the euro starts to move lower, or if the dollar index starts to move higher, it's going to feed on each other. So I think that is the risk right now. One last thing I should take a look at before I let you guys go before the open here on Sunday is take a look at the S&P. Now I've kind of drawn out what I view, and this is something I drew for our traders that are listening into the FACE webinar on Friday. I think I drew this for you guys on Friday. I may be mistaken, but I believe I did. You know, I'm looking at the S&P as being in a consolidative pattern, you know, just, you know, a consolidation wedge type of pattern. And the risk is that the S&P could break lower here and push back towards, you know, 2550 or you know, 2520, which is really going to be the spike low key support levels for the S&P. But this is if this continues to develop the way that I think it's going to develop, doesn't make me right either. You know, this could break higher. I just think this is what this is my view, my base case, if you will. I think we're consolidating before a bigger move, which would be a move like you know, here or here out of this wedge, and we'll have to, you know, figure this out, weeks from now if we end up just consolidating. But this is a bearish wedge since the highs are getting lower and the lows are fairly consistent. Even though this is a higher low, it still is the support zone, if you will. So the reason why I'm pointing this out to you guys with the S&P is because the dollar has, oh, and there's one other thing I need to show you before I forget. The dollar has been viewed as the safe haven currency of choice if we see higher volatility in equities or lower equity prices. The dollar tends to behave as the safe haven currency. We haven't seen risk aversion in so long in the stock market. And I know some of you are going to go, well, what about the big decline that we saw at the beginning of the year? Why didn't the dollar perform well then? If you look at the overall trend of the stock market has been moving higher. I don't think you can really argue the point that we have seen truly a reversal in stocks. Well, at least proof of it. Some of you could argue the point saying this is a reversal and the stock market is going to go down. That might be your viewpoint here. But I think if you look at the trends that we've seen for the last several years, for since 2008, 2009, the stock market has been higher. Yes, this has been a bump in the road, and I think it has rattled the cage of a lot of longs, but I don't think you have people bailing on the stock market just yet. I mean, I think maybe some people are, but I mean, as far as general consensus is I even talked to a friend of mine who's a pretty well-to-do businessman. He's in sales, but he does well for his family. And we were talking about the stock market, and I don't try to influence my friends very much, but he as far as giving my opinions too much, but he was like, it's the stock market. We might go down a little bit, and it'll eventually go higher. That's the predominant theme. Kind of like house prices, like they just never go down. So let's But at what point does the average investor, really start to worry? Well, I think if you start to see a decline from current levels, if some investors are like, well, we saw 10, 12, 15% off the top of our portfolios at the beginning of the year, but it's been overall since Donald Trump's been in office, it's been a nice ride this year, from 2000 in the S&P to 2800, and we're currently trading at 2600, 2700. It's been a nice ride, but if you start to see a decline from current levels, does that worry some investors longer term, and people start turning to cash and saying, you know what, just get me out of my investments and put me into cash? And that's when the dollar, in my opinion, starts to really benefit. So I guess the point I'm trying to make here is if stocks actually start to sell off from current levels fairly aggressively again, and we see another down move, whether it's 10% from current prices or 15% or whatever, do people start to rush back into the dollar? And I think that's going to be the catalyst that drives investors back into the dollar from a safe haven standpoint. Now, one last thing I need to point out here is that if you look at the bond market, and we do analyze the bond market on ForexAnalytix, you'll see it as the 10-year, the ZNs, but I'm going to pull up the 10-year for you here. You notice how we hit new trend lows. Now, when bonds go down, yields go up. And when yields go up, typically the dollar will respond positively. Well, what we haven't seen recently, and I don't know if this is going to come up, but let me put in the dollar index here. What we haven't seen is with bonds coming down, the dollar has not been moving higher. And you can see there is typically an inverse relationship between bonds and the dollar. But we've seen bond market move down, dollars move down as well. But if we're making a new leg lower in bonds and bonds continue to sell off, does that rise in yields, especially if the 10-year yield gets above and this would be the 10-year yield right here. You know, or not, is that the 10-year yield? Oh, it's right here. Yeah, if the 10-year yield gets above, you know, 3%, does that actually trigger dollar buying? And it could. And the flip side to that is, if bonds rally because of risk aversion, the dollar could rally as well. So, you know, it's something that I think we all should be paying attention to, that the bond market could create some volatility in the dollar. It could be a result of what's happening in stocks, and it could push the dollar to a possible upside breakout. It's something that I think we all need to be paying pretty close attention to moving forward. But guys and gals, my name is Blake Morrow, and if you've liked this video, please click the thumbs up button and make sure you subscribe to our YouTube channel so you don't miss any of our great interviews that we do each and every day and during the trading week. Dale Pinkert does some great interviews with a lot of great traders and analysts and economists, and they're all for free. So make sure you tune in, subscribe, and like this video if you think it's going to benefit you this next week. And yeah, make sure you take your trial of ForexAnalytix as well. Thanks you guys for listening, and have a great trading week this week.